Welcome back. You're watching Market Sense. Time now to check in on the fixed income and currency markets. We've got Jayesh Mehta, who's country treasurer at BOA Merrill Lynch, joining us on the show. Jayesh, to begin with, we've seen yields climb quite a bit since Friday closing levels. The concern being that inflation is going to become a bigger challenge because of rising crude oil prices. How worrying do you believe it's looking?
Oh, it's quite worrying. More than, of course, one is crude oil price, which is a little bit medium-term impact on it. I think immediate worry is for tomorrow's inflation number, which is nobody knows how much the impact of electricity hike will be included in that. So the whole range is coming out pretty wide in terms of expectation, between 7.20, 7.5 is what people are expecting. So that's immediate worry. And crude oil, of course, remains at the back of the mind because it's climbing because of whatever global issues on supply side is.
Sure, Jayesh, given that Brent crude oil has surged above $113 per barrel, that's really putting quite a bit of pressure on the rupee against the greenback. Where do you see the rupee now headed, and how much of a concern do you think the overall Brent crude equation would be to this?
I think right now at this juncture, again, it's a lot of hopes built in. Of course, if you look at if there were no hopes built in to the system, we would have seen rupee again depreciating further. But right now it's still holding up around 55 quarter, 55, 30, 40 or so. And that's mainly your equity flows are pretty good. And there's also an expectation that hopefully in next 9-10 days, we see some announcement on withholding tax on fixed income. So FI withholding tax, if that gets rationalized, then again we will have flows coming in through the debt FIs too.
Sure. So Jayesh, just on the point you made about withholding tax, should we indeed see something on that front come through before the end of the month? Do you expect bond prices will rally, and can we expect that yields will move back towards the 8% mark, or is that a little ambitious?
That's little ambitious because I think the expectation right now is the withholding tax rationalization is required to be done on the entire fixed income, but the market's feeling is they may just do that rationalization only for infra bonds, which is mainly the PSU bonds, and that will get a little bit of rally, and not the government bonds. But it is actually required on government bonds, but I don't, like nobody is expecting it to happen immediately. But maybe next 10 days we see something on the infra bonds.
Jayesh, taking it right back to the rupee, what do you think the movement is going to really hinge on? Will it be taking cues perhaps from the global risk sentiment, or will it be watching out for how government tackles the fiscal measures like rising diesel prices or foreign investment, attraction of foreign investment?
Yeah, I think it's more to do for us. It's like immediate thing is how they incentivize. Maybe diesel is something maybe again goes to the medium term. But you see small step, baby steps, even if they take to rationalize or maybe to give some positive hints to the foreigners. And we are seeing the flows being quite robust for at least last 1 week or so on the equity front. So maybe some small announcements will also give pretty good flip to the market.
And Jayesh, there are a number of people who maintain the view that you will see the rupee go to levels of 48, 49 by March 2013. What's the BOA expectation?
I think that's too ambitious. Even if we get, I think on the best case scenario, what we are seeing is unless we have some dramatic changes like fiscal deficit reform and subsidization getting reduced and all that stuff, we don't see really. I think 52 looks like a best case at this juncture.
And tomorrow we'll be having the inflation reading coming out, and we're expecting that this time around it might be a little lower at 7% versus 7.25% last month. What's the view from BOA?
I think we are expecting our official forecast around 710, 720, but I think the market expecting slightly higher because of the electricity price to be included. Whether it happens this month or next month, we don't know.
And are you expecting core inflation also to continue to remain sticky, and how do you believe the bond yields are going to read into this number?
Yeah, it's bond yields are going to react to the headline number, right? So if tomorrow the headline number is below 720, it will react positively, but we don't know. So it's only tomorrow we'll come to know, right?
All right, and Jayesh, just one last word on the rate outlook. What's after all the events that we've seen play out over the last couple of months, have you scaled down your expectation in terms of how much more in rate cuts we can see before the end of the fiscal?
No, I think scale down, people have generally scaled down. It's just a question of timing. But the way the global scenario is going on, even with inflation, we don't have much choice but to go with the rate cut, particularly the way the economic forecast of every research house is getting lowered. We do need to see a rate cut. We do expect at least a 0.5% rate cut before the year end.
Okay, thanks very much, Jayesh, for taking the time out and joining in with that overall view on the macros of the economy. You've got the rupee, which is currently at 55.39. BOA said that they see it at close to 52 against the dollar. Let's get in more perspective from Manisha Gupta, who now joins in. Manisha.
Well, thank you for that, Avan. After nearly 1% of gains coming in the previous week, and that was the first weekly gain in last 4 weeks, we have seen a 0.25% coming in for the Indian rupee at this point in time. We opened on a firmer note, but a decline in the euro is something that is weighing onto the Indian currency as well. Ditto for the case, the Indian equities, those also have been jittery, and that also seems to be putting pressure. The previous week, you had the Finance Minister Chidambaram statements coming in, and also the global dollar weakness that was supporting the rupee. But at this point in time, it's jittery as best ahead of the inflation numbers expected in the markets tomorrow. For today, though, markets are expecting a further decline coming in for the Indian rupee. So you have a buy call coming in from Angel and Nirmal Bang, and they expect the rupee to touch levels like 55.55, even 55.60 in the intraday market there. There also is a sell call coming in from Alpari, and they're betting on a level of 55.20 before the day ends.
All right, Manisha, thanks very much for coming in on the show with that check on the currency markets. Let's take it back to equities and go straight across to Prakash for sharing his top trading ideas at this moment.
I think I'll avoid the stocks and I prefer to short Nifty. Nifty, to my mind, today's move and Friday's move looks more of a reactive move, which basically means it's holding out here for a further downside. So I would say the confirmation will come when it breaks 5,330 Nifty futures, and then will slide on perhaps to levels closer to even 5250, 5260. So as an aggressive trader, anyone can short Nifty now, just have a stop about 5360 and trade short side. It still looks more of a reaction move.
Okay, Prakash, thanks very much for joining in with those trading strategies. Very quiet market. We wrap it up right here on Market Sense. Thanks for watching. Coming up next is Markets at Lunch.